And guys, when we look at history, I truly believe this is not clickbait. I truly believe this next bear market, I'm not going to say it's going to be the deepest, but I think it's going to be the longest one we're going to have. Right now, the stock market has fallen 20% this year, the S&P. We're not doing FUD here. We're not trying to put fear, uncertainty, and doubt. But it's still not even as the levels we were at in 2000, at the peak of the dot-com boom. Look at this. This is my S&P stock market to GDP ratio. We're currently 61.3% overvalued, which is a lot lower than last year's peak of 107.
Oh, wow.
But look at the dot-com crash. The highest it got, based on a quarterly basis, was 57.3%. So we're still higher than we were at the March 31st peak. The actual peak of the NASDAQ, of the market, was March 10th of 2000. So we're not even there yet. And what happened from there? The stock market went from a peak of 1468 down to, this isn't necessarily the exact drop, but 837.
Wow.
And guys, guess what the next 10 years did? The worst was negative 4.8% at 56%. That's not including dividends. So based on history, the next 10 years are going to be tough. However, you have to believe in this. Dollar cost averaging. So let's look at it this way. If today we're at 3,800 on the S&P, and let's say 10 years from now, we end up at 3,800 again, which in all likelihood might be actually even less than that. So the stock market's going to go like this at some point. You might sit there and say, oh my God, I'm going to lose money. No, you're not.
No, you're not. It's an average. It's a nice average there.
So what are you doing here, Mo?
Buying.
What's that called?
Buying, dollar cost averaging.
And you end up paying this. That's how you make money.
You're going to underpay sometimes.
That's exactly it. Over long periods of time, guys, forget about 10 years, go over 30 years. This is what the stock market does. That's the value. But here's where the prices go. Sometimes you overpay, sometimes you underpay. But overall, that's how you match the market.
And I know it can be hard when he drew that trough. It's hard to buy in that trough. It's hard to keep buying in that trough.
So how do you buy in it?
You consistently just keep buying it. Best thing you can do, set it up so it auto buys.
Auto buy, auto put money in your account, auto 401k. Don't even think about it.
Don't have your human emotion take the wheel.
Guys, this is not me being fearful. I want you guys to know there are literally emails and phone calls of 08, 09 where my bankers in Chicago were like, you're the only call we like because you're the only one speaking positively. And the funny thing is, years later, I was criticized for being critical of the market. One of them Dave said to me, Paul, but you said the market was such a great value. I'm like, Dave, valuations have completely changed. So I realized right then and there, that was the first time I ever said, wait a second, but values changed. And he didn't get that. Yeah. He's like, well, how can you be so positive in the market in 08, 09 and now you're not? Well, values have completely changed. That's what I'm going to respond to. And if the S&P went to 2000 today, I'd be doing this. I'd be clicking my heels. I'd be going, this is awesome. And you know what the criticism I'd get from the market, from everybody in the crowd would be? Paul, you don't get it. There's so much fear. There's so much other stuff. Why are you doing this? Because, guys, over long periods of time, it will do better when you pay less. Think about it. You're going to make more money as you pay less for something.
If the market went to 2000, I wouldn't have time to click my heels because I'd just be sitting here just buying everything on the computer.
We'd probably run out of money. We'd be like, oh my God. That's what happened in 08 and 09. I was like, oh my God, I'm running out of money to buy stuff. Yeah. And guess what? I got hit, and I'm going to get hit.
You're going to get hit.
If the market goes to 2000, I will get hit. My stocks will go down.
But if you buy good companies that have good financials over a long period of time, they're going to recover faster and they're going to do better.
That's the big thing. The best financial companies will not fall as much and they'll recover faster. Yep. Guys, there are 3 questions I ask, and do this when it comes to individual companies we buy, but you can apply this to the stock market in general. First off, do I think the stock market will be around in the foreseeable future, 10, 20 years? Do I think the S&P is going away?
I would hope not.
If it does go away, it's not going to matter how much money you have. What's going to matter is how much land and guns you have. 2, do I think that the U.S. economy and the S&P 500 will make more money in the foreseeable future than it is today? Profit-wise, cash flow-wise?
I think yes.
I think so too. Third one, and this is the hard one. Can I pay a reasonable price for that today that factors all that risk in there? Now, the question is, you might sit there and say, well, Paul, the answer is no to that. Why should I buy? Because you need to get in the habit of always investing no matter what. Guys, I sometimes force myself to buy stocks that I'm scared about just to get myself in the habit of buying those stocks. Like when Meta and Bob and those companies have fallen, I force myself to buy more of it just to get myself in the habit of saying, Paul, if you really believe your thesis, why are you holding off? Mo, go ahead.
And if you're buying at 380, maybe there's a point where you're going to be buying at 180. Who knows? I mean, it's very possible that the market falls to that level. But guess what? You keep buying here, and these will all balance themselves out.
Yes. If you bought at 180 and 380, you essentially bought at 280.
Because you're buying the same amount every single time.
Every single time. And guys, when we look at history, I truly, truly believe, this is not clickbait. I truly believe this next bear market, I'm not going to say it's going to be the deepest, but I think it's going to be the longest one we're going to have. I don't know if that's right or wrong, but in order for us to get to a point where you have great opportunities, it has to be at the most pessimism.
Yeah, and it makes sense with the pendulum swing that we've had.
Of course.
I mean, here's your pendulum, and we've swung to these insane highs all the way up here. We've almost broken the pendulum. It's going to have to swing back. This is just how this works.
That's the emotional high.
Yeah.
When you have kids all being great investors, you have Bitcoin. I've said before, I'll say it again, I think crypto will be the poster child of this bubble.
Oh, yeah.
I think Tesla's going to be a big one, but I think crypto's going to be this makes no sense whatsoever, and people still bought it.
I think it's going to be crypto also, because I do think that Tesla is going to be around in a decade and it's going to be a good company.
Yeah.
So it won't be looked back at. Can you believe that about Tesla? It'll just be forgotten, kind of.
And we've said this in how many videos? There will be a time when Mo and I are buying Tesla and people are like, you're crazy. You don't get it. And to me, I think it's funny that everybody's criticizing Elon Musk for buying Twitter. And that's the reason why the stock has fallen so much. Okay. And I'm like, if him buying another company was the reason why the stock fell so much, what the hell were you doing buying the stock to begin with?
So yeah, you're saying that without Elon, this company is dead. That's basically what you're saying.
So to my next question to you is, if you believe that,
what are you doing?
Why are you buying that company? I always tell people who want to brag about how important they are to their business, if you're that important to your business, you don't have a business. You can't sell that.
And a good example, not that, I mean, Elon founded Tesla and everything, but the CEO of BJ's Wholesale. Do you remember that? He was like 45 years old. He just had a heart attack one day and died. And this was in 2020, maybe 2021, whatever. I didn't know that. Yeah, but the company moved on. It doesn't seem like Tesla's going to do that.
People think that. People think it's not going to move on unless Elon. Look at that chart, Mo.
I know, it's unbelievable.
Look at that chart. Just do 5 years.
I'm not used to seeing this with Tesla.
But guys, we've always said it. We said it. Go look at our past videos about Tesla. We sat there and said it just can't go on forever.
You know what's funny about this? If you just start drawing these lines, look at how it kind of looks like the S&P. It just keeps getting lower and lower.
Except it's fallen a lot worse.
Well, a lot worse.
And guess what? Look at the 5-year chart. It's still up 400-some%.
Yeah.
So if you bought 5 years ago, wonderful.
Congrats.
I would just sit there and say, hey, what do you think the long-term value of Tesla is? We look at every investment as the present value of all future cash flow. The business doesn't care what the market perceives its value to be. It's going to keep generating that cash flow for the foreseeable future. What Tesla is going to create is going to be completely separate from what its stock price does. Mm-hmm. Now, one can make the argument that as Elon discusses more, and it's funny, Elon used to be the poster child for all the man bun, hippie, California liberals, and now they hate him. And it's so funny because they thought he was a god before.
Yeah.
And now all of a sudden it's like
switched overnight.
And I just look at it saying, there'll be a time. Look at solar. He was going to buy solar and he bought Solar City or whatever it was. And is that the name of the company, Solar City?
Yeah.
And it was going to be the best thing ever. And guys, 88% of their revenue at Tesla still comes from cars. It's a car company. And I'm hearing less and less of it's a tech company. It's not, you don't get that.
Well,
but
it's not a tech company because it's not going up anymore.
Correct. Exactly. So guys, if this makes sense to you, even if it's just a little bit of sense, I don't need it to be like, oh my God, if it just makes a little bit of sense to you, subscribe to the channel, share this with somebody else. Trust me when I say it'll be well worth it for you. You'll walk away understanding more about investing by just watching 4 or 5 of our videos. And guess what? We're the boring guys who say the same things over and over because we're also the guys that'll be saying, buy Tesla at 30. Because it'll eventually fall very, very low. Where? I don't know. I don't have a clue. But it'll fall below where its value is. Now, that value could increase over time. It could be worth $80 a share at some point, and the price goes to 60. I don't know. The bottom line is, I still see a hard pathway for a lot of these boom stocks that made this bubble the way it was. Thank you for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?